this book of the week, The Automatic Millionaire by David Bach. This book talks a lot about automation, paying yourself first. Talks a little bit about owning your own home as well. So some of the key takeaways from this book are what he calls the latte factor. So in a lot of people's cases, they go to Starbucks on a daily basis, spending between $3 to $6 roughly. And he just goes and does some calculations on what that costs you long term. And if that money was invested, let's say, so it ends up costing you thousands and thousands, tens of thousands of dollars over your lifetime. So it's interesting to just look at those patterns. He even suggests to writing down your daily purchase patterns just to see where your money's going. And it's not that you have to set up a budget. Actually, he recommends not setting up a budget. He recommends actually paying yourself first, which looks like, let's say if you have a bi-weekly paycheck, for instance, to automatically deduct between, let's say, 5% to 15 to even 20%, depending on where you're at. So when you're just starting out, he said himself, he started out just saving literally 1% of his earned income in investment. So you can start anywhere, literally with just 1%, but the key is to make it automatic. So have an automatic deduction out of your savings. And then he recommends setting up either an IRA, a 401k, a Roth IRA. And then so in some of these cases, like with an IRA, I believe a 401k, you can take advantage of pre-tax dollars. So the money that you make, instead of paying after you're taxed on it, let's say if you have $1 to spend or $1 to invest, instead of having, let's say you're taxed at 30%, so instead of having 70 cents to invest, he's actually recommending that you put in pre-tax would mean you have the whole dollar to invest, and then you have that whole dollar accumulating interest, 5 or 10% interest instead of just the 70 cents. So it's really pretty cool to do that to do pre-tax investing, and then to actually automate the process, because of human nature, we'll generally spend more than what we've got, so if you just automatically deduct it out of your paycheck, it's much easier to cope with it, basically, because you never see it. You never see the money, so you're not going to spend it. He talks a little bit about creating an emergency fund, and you can do that. He recommends at least having a month to about 3 months or more of what you need to live on, so that you just create some more peace of mind. So you can definitely create. There's several accounts that you can do. I don't want to go into that in this video, but if you do read the book, he does talk about where exactly to put those. He does recommend putting that cash in, let's say, a money market account. He goes into automatic debt-free home ownership, which he highly recommends owning your own home rather than renting, because you can definitely get some equity when you buy your own home. If you're renting for 30 years, you have really nothing to show for it, rather than if you're paying the same amount in your mortgage, you would, after 30 years, own your own home and at least have that much equity. And then you can also use that equity as leverage for other purchases and so on. So definitely look into that. And then a huge tip that I got from this, because I'm actually looking into purchasing my own home very soon, he does talk about paying off your mortgage on a bi-weekly term instead of paying it off every month. And so there's a couple ways of doing this. Talk with your bank, but it's it's highly recommended to do this. And he did some calculations on it, and actually on a 30-year mortgage, by paying the mortgage off the same amount of money, just doing it every 2 weeks instead of every month, you actually can cut off between, let's say, maybe 5 and 10 years off of the mortgage. So it's a huge deal. Some of the banks will charge a small fee, but if you really, I mean, it's really worth it to sit down and do the math on this. And so, one of the fees was maybe a $2 fee every time, which doesn't really equal anything if you're saving. You could be saving, $50, $100,000, even more than $100,000 over the life of the loan and or the mortgage, and so it's definitely worthwhile to look into biweekly payments. He talks a little bit about paying off credit cards, how to do that, which ones to do first, and then I don't want to get into too much depth about that. And then he goes into automatic tithing. I automatically tithe. I don't know. It's either $5 or $10 to Tony Robbins's charity right now, and it just automatically deducts from my bank account right into the charity. And then you can also look into. He talks a little bit about taxes. Basically, when you give to charity, tax credits that apply, and so on. So you can look into that if you want to read the book. But again, all in all, pay yourself first. Save at least, let's say, at least 5%, if not 10 or 15, if you can afford it. And automate. Really, just automate, 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 and then these principles can be used for the rest of your life, and also in other areas of your life. So it's a pretty cool concept. What else can you automate in your life? Whether that be your health habits, your reading habits, your studying habits, your friends, your family habits. So just look into some tools that you can automate your life with. So it really, really helps. So I hope you enjoyed this, and thanks for watching.